Hey everybody, welcome back to Grain Markets and Other Stuff. It is Wednesday, January 27th. It's 12 o'clock Central Time. Guys, real quick, you know the normal drill here. If you like these videos, make sure you hit that like button. If you have not subscribed to the channel already on YouTube, subscribe. That will really help the channel grow and really help to distribute these videos out there. If you're listening on the podcast, make sure you leave me a review. Without further ado, I have a guest today. Ed Usset from University of Minnesota. He is a grain marketing economist there. Ed, you doing all right today?
I'm doing great, Joe, and thank you for having me on today.
I appreciate you coming on, and I told my listeners the last few days that we were going to do this live stream. I said I'm going to have Ed Usset on from University of Minnesota, and I've never met you. We've never met in person, and the reason I decided it would be a good idea to invite you on was because we had a good conversation on a TV show several months back, and when I sent out this deal that Ed was going to be on, it turns out that you have quite a fan club up there in Minnesota and elsewhere also.
Yeah, well, I get around, Joe. Not this year, but I get around in a typical year.
Yeah, and as we discussed, we both do a lot of traveling in the winter typically, and not so much this year for obvious reasons.
Yeah.
So the conversation that I wanted to do today and that we're going to talk about is I titled it "Discussing Past Grain Sales" because I think it's relevant this year when I think a lot of farmers made sales of corn, soybeans, and wheat early, and we're going to talk about the definition of early, the definition of good sale versus bad sale. Before we get into all of that, can you tell us really quickly about your background and about your work with the university right now?
Well, I'm born and raised in Minnesota, and while I didn't grow up on a farm, my neighbors all farmed, so I've driven tractors, I've milked cows, I've done all these things. I wasn't very good at it, Joe, so it's probably good I didn't pursue it as a career. After college, I went to work for the Pillsbury Company as a wheat buyer and a pit trader at the Minneapolis Grain Exchange. So I spent the 80s in the trading pit of the Minneapolis Grain Exchange, trading, of course, hard-red spring wheat futures. I was a buyer, and I eventually got kicked upstairs to the main office in downtown Minneapolis. And in the early 90s, we sold our milling division, first to Cargill and then to ADM. Pillsbury exited the milling business, and I exited Pillsbury at that time. Since then, I reconnected with the university in the mid-90s, and I've been there ever since for the last 25 years. I write, I speak, I've written a book on grain marketing. Grain marketing is simple. Some of your listeners are going to be familiar with that. Something like close to 15,000 copies over the last 13 years. So I do a lot of teaching and talking about grain markets.
And your line of work in regard to the university is a little bit different, at least from a lot of other people I know who are professors or economists. You focus specifically on grain marketing, where a lot of the guys at other universities are more like what we call just economists. They focus a lot more on global stuff, more on supply and demand. You're very specific to grain marketing itself, which I find interesting.
Yes, I call myself a grain market economist. That's what I call myself. Now, I look at the bigger picture, but in trying to stay focused on what does it mean to grain markets.
Understood. All right. The first question I have for you here, I have a short list of questions. I think they're good questions. The first question I have here is, why was 2020 different as a calendar year in regard to grain markets and grain marketing?
Well, we had a pandemic, and that absolutely cratered the grain markets. It cratered all markets. It cratered stock market. It cratered commodity markets, and turned what would be, I talk about the spring and early summer as being a good time for grain prices. Seasonally, often, not always. There's no 100% here. And of course, last spring, April, May, June was the worst part of the year. It was an absolute contrary year. And just when you think it couldn't get worse, Joe, the last 5 months of 2020, and I've looked at the data, I've gone back 40 years, most second or third most powerful rally we've experienced in that 5 month period, depending if you're talking about corn or soybeans. Second or third most powerful rally we've seen.
So that's the thing that's exceptional to me, I guess. I mean, the
Mm-hmm.
reasoning is always different, but what was exceptional to me was just the stark lack of any seasonality at all in the markets. We fell apart when we're typically supposed to rally, and then we had the biggest rally when we're typically supposed to fall apart, right?
Yeah, and I have to tell your listeners, I'll throw myself into the pile of a lot of people who did not see what was coming that came at the end of last year. I like telling people that in August, I wrote an article. I write columns for Corn and Soybean Digest and for
Mm-hmm.
Farm Futures. I submitted a column in early August where I called early lows in the corn and soybean market. Now that sounds like I'm bragging about my prescient view on the markets. I remembered writing that, and it got printed. And thinking to myself, first of all, this is a dumb thing to do, Ed. You're going to eat your words as the market goes lower in the harvest. Second thing is, at the outside, I thought maybe the markets could rally 5 to 10% higher off their August lows.
Mm-hmm.
We were up 40% plus by the end of the year. I don't think I didn't see that coming. And Joe, I'll be honest, I don't think I know anyone who saw that coming.
We're actually kind of similar. So I did a podcast episode back in, it was July or August, and I talked about the prospect of a contra-seasonal rally in the corn market because I thought we never had the rally, and very rarely, if ever, do you go a calendar year without some sort of rally. But no, never did I dream that spot month corn futures would be $5. I mean, I thought we'd be lucky to get $4 at the time.
Right.
So I totally agree that I don't believe anybody saw this coming. To get into more the grain marketing side, I think that there are a lot of farmers out there right now who have what they would classify as being bad sales on the books. And I have the word bad in quotations. And guys started to sell corn and soybeans when the markets got to profitable levels, which they were begging for all year. Just give me something to work with in terms of profits. And now a guy looks back and says, that's, quote, a bad sale. How do you feel about just that statement in general?
Well, first of all, I'm very reluctant to look back. I just don't see a lot of good things coming from looking back at old sales. You're always too cheap and too early in an up market. I tell people as you look ahead to the year, and I'm always admonishing producers, look ahead, don't look back. Look ahead, look forward. What I tell people is the most important 3 words you can say to yourself as you prepare for the year ahead. Those 3 words are forget last year. Just forget about it. Put it behind you. You made sales that you felt were good at the time. I would also say, Joe, there were a lot of payments made, special payments made in 2020. Yep. It's going to be a good year for people. Mm-hmm. But regretting the fact that you left $2 or $3 on the table, which is hard to believe, but in the case of soybeans, a lot of people did. Forget about it. Move ahead. I see some great opportunities popping up for 2021, opportunities we haven't seen for new crop sales in several years.
So to go back to my I put the word bad in quotes. I mean, to actually define that, is a sale really bad if it made money, or is it only bad because it was early? I mean, it's if it makes money for you, is it bad by definition?
No, it's a good sale. I tell people, I try to get people to shift their mind around. you're trying to sell the high of the market, but you're not going to do it. You're
Right.
just not going to do it. Well, maybe if you farm for 40 or 50 years, you'll stumble on it once or twice with some sales. But the fact is, you're not going to sell the high of a market. So if you're not going to sell the high, what are you aiming for? You're aiming for a good average price and a profitable price. And if you achieve those things, forget about it and move on.
Well, and that's kind of the problem with, I think, the way that a lot of farmers define bad. They basically define bad as a sale where they could have done better. But that
Mhm.
by that definition, like all of your sales are bad sales, right?
That's right.
And
That's
then
right.
and then conversely, the definition of a good sale, I think in the view of a lot of farmers, is that you make a sale and then the market goes down. That's a good sale, right?
Yeah.
But
Which
that
is the
that
craziest thing in the world.
yeah, and that's not really what you want. I mean,
No, you don't.
you don't want to make a sale and then see the market fall apart because you've always got more grain to sell.
Yeah.
So
Yeah.
I think that just by definition, like the way that a lot of people in grain marketing and in farming, I think the way that they view their sales is it maybe needs to be adjusted a little bit. Like those definitions of good and bad might need to be adjusted slightly.
Well, I agree with you, except for one thing. It doesn't need to be adjusted a little bit. It needs to be adjusted wholeheartedly.
I was trying to be nice about it, but yeah,
Yeah.
you're right.
Yeah.
You're absolutely right about that. Okay, so I wanted to talk about reownership. And you alluded to the fact that guys should look forward and not back, which I totally agree with. You alluded to the forget last year, which I totally agree with. Tell me about your thoughts on reownership.
Well, I just struggle with it. I know it seems to be a common strategy out there. I know it is put forth by a lot of people in the business. You know that corn you sold 2 months ago, well, you have a chance to reown it with call options. Well, that reownership strategy, Joe, it's available 365 days a year.
Mm-hmm.
And if you think it through, this idea of reowning something you've already sold with calls, and you can sell it later for a second time, you can reown it a third time. There's no logical end to that.
Mm-hmm.
There's no logical end to when you say, I'm done with that crop. I mean, you could keep reowning the crop. I guess you could do it for 5 years with calls,
You could
buying.
do it indefinitely,
You can
essentially.
do it indefinitely. There's no logical end. And to me, when the crop is gone, put it behind you and look ahead. The opportunities are in front of you, not behind you. So I've always had a hard time wrapping my mind around reownership. You know, do we apply that to our lives? I mean, if
No.
one of our listeners, Joe, if you went out and you sold your old pickup for $1,000, you know, it's been sitting in the shed and you don't use it anymore. You sell it for $1,000, and a month later you find out that by God, that old pickup that might have been worth $1,500. We don't go out and re-own it to try and do it again. I mean, we sort of move on, and I think we need to do the same thing with our crops.
That statement is eerily similar to something that I said on this podcast before, and the analogy I used was fishing boats. I fish, and so I use this as an analogy. I said I buy a boat from a company called Bass Cat Boats in Arkansas, and they sell that boat, they sell it at a profit, and they go on to the next year and they make more boats and sell those boats at a profit. They don't come back to me and try to buy my boat back from me.
That's right.
It's like, what other business in the world functions in this way, shape, or form? It just
Right.
it never, the concept never made a whole lot of sense to me, with a couple of exceptions. Like one exception would be if a guy's forced to sell cash grain at a very low price because of cash flow logistics or whatever, then I suppose I'd entertain the option. But just when you get into like selling at a profit and then reowning, or selling in a bull market and then reowning, a profitable sale, the reownership thing never sat well with me, because there's always that chance that you could take your sale and make it worse rather than make it better.
Yes. 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 I'll add one more exceptional way where you might consider reownership, and that is in a sharply inverted market.
Mm-hmm.
Let's say the nearby contract is trading well above the others, and you may, that means you're selling at a nice high price, and you might entertain reowning out ahead at a lower price. No guarantee it'll work. The odds improve a little bit in your favor, but boy, I even hate to mention that. I still think it's looking backwards when you should look forward.
Would you ever do something like that? Like, I mean, one great example right now would be like, old crop versus new crop corn. Would you do it in two different marketing years, or is that something you would not recommend necessarily?
Well, it's not, I wouldn't call that hedging. It's certainly not hedging. It's more of a speculative move. I'll never say never to these things, but just understand, once you've sold your grain and you reown in the next marketing year, yeah, you're speculating. Call it what it is.
Mm-hmm. Mm-hmm. Um, so we talked about how there's got to be some sort of shift among farmers, I think, in the way that they define their sales, using good and bad as definitions. Have you had any luck in your experience helping farmers to remedy the way that they view this stuff? Is there a fix to it? Is there some sort of therapy program that you provide? Is there some sort of meditation exercise that they should undergo? I mean, how do you remedy a situation like this?
Well, my remedy has been keep traveling and keep talking. And
Mm-hmm.
it takes a long time for some people to change. I'm happy to note that I meet people who make the change, who have made the change. I'm not going to say it's a majority. It's funny you mentioned therapy because I, for many years, have threatened my audiences that the next time I come through, I'm bringing a university psychologist with a red leather couch, and we're going to call you up to the front of the room and lay you down for 15 minutes and talk about some of these issues. I mean, it's psychology, and I don't think there's a quick fix. I wish there was. I'll keep looking, but I haven't found a quick fix.
I kind of find myself in that same situation a lot of times. I talk to a lot of farmers every day and kind of act as a consultant in some respects, and a lot of the conversations are just kind of trying to remedy some of these mental things, the mentality of grain marketing. I mean, I all my customers know, they know that I'm not a guy who thinks I can predict the market or anything like
Right.
that. But I think what I am good at is breaking things down to basics, maybe steering a guy in the right direction, maybe helping a guy to avoid some pitfalls. And this conversation, this reownership thing, and looking back on past sales, I mean, that can be a real pitfall, I think.
Yeah, it's a big one, and in my book I talk about 5 common mistakes in grain marketing, and
Mm-hmm.
that's one of them I explore with paper farming. I guess they
Mm-hmm.
call it paper farming, sell and reown, and boy, I tell you, in the corn market, the record there has been miserable.
Mm-hmm. Yeah, I bet it has been, especially in recent years when we've been in bear market territory a lot
Mm-hmm.
more so than bull market territory. Now reownership would have worked out real well this year for anybody who would have done it to a significant extent, but this year isn't like the rule. This is, like we talked about at the beginning, this is the exception.
Yeah, well, you talk about recent years. I've got data that goes back 30 years, and you're right, this year was good. And in the world of corn, I believe that makes the fourth year out of 30 that was
Mm-hmm.
good.
So when you in your experience, when you see a farmer really look back and focus too much on the old sales, do you find that their decision making moving forward suffers because of that?
Absolutely, because they're not looking ahead at new crop opportunities. They're looking backwards at mistakes made a year ago
Mm-hmm.
or perceived mistakes made a year ago. And that I just keep saying, forget last year and look ahead. Uh, the opportunities for 2021, if you're aiming for a good average price. Yeah, we've struggled over the last 5, 6 years. We've had before this some brief spring summer rallies in many years, not this last year, not 2020, but 17, 18, 19. those years. We had very brief, sharp rallies and not a great opportunity to get something done on new crop. And right now, I'm looking, what do we got? November beans at $11.50 for 2021. We hadn't seen that in years. December corn, 440. This is good stuff. This is good opportunity. And for people who are looking, still kicking themselves about last year, I'm like, there it is. It's right in front of you. Pay attention.
Ed, I'm going to see if I can ask. I'm going to see if if I can find something that we disagree on here. So I'm going to make a statement, and you can let's see if we agree or disagree. I have told customers, and I've said on this podcast before, I think marketing grain in an extended bull market like this is the most difficult environment in which to market grain. I actually thought that the last 5 years were easier in that you could make those quote good sales where you'd make a sale and then the market goes down,
Right.
sell on a rally and then the market goes down. This stuff is trickier to navigate. I mean, the volatility is bigger. There's a lot more risk in both directions. I find this, even though it's a good problem to have, these high prices, this is a great problem to have. I'm not saying that. It's much better than the alternative.
Yes.
But I think that the actual task of marketing grain can actually become a little bit more complicated.
Well, it's difficult. It's difficult when you and I are reading the same background material. We're looking at the same export sales. And, here I am talking about maybe you should wade in and make some sales of 21. And you read a lot of bullish information right now.
Yeah.
I read someone last week talking about $16 to $18 soybeans. These things are in our ear, and it is very difficult. But what I'll tell producers that what you're reading is outlook. Okay. And outlook is interesting. We need to be on top of what the market's doing, but we should spend a little more time on an in look. And an in look means, what's my business? What does my business need to go forward? And stay focused on your own business and what works for you. And try to block out some of that outlook talk, because
the outlook would have really led you astray this last year. I mean, what was the outlook? What was the outlook when we were printing lows in these markets over the spring? As bad as it could possibly get, right?
Oh yeah, absolutely.
And that was when the lows were printed. And I would bet that when the highs are printed in these markets, whenever it is, the outlook's going to be awfully damn good, right?
Yeah. Yeah. By the way, just so your listeners know, I'm far from perfect on this. About 9-10 months ago, the university has test plots in the state of Minnesota, that big plots. And so they have grain to sell. And they brought me into the fold to kind of help them navigate what to do with the university's grain. And of course, the market dipped down. It's in the spring. Joe, we had a 25 cent rally off its lows in June. They were terrible lows in April and May. You know what I'm telling our people at the university? Get it sold. Get it sold. It's a running joke with my colleagues at the university that since I joined the team, the market has done nothing but go up, and all I've said is get something sold. So,
yeah, that is the way that it works sometimes. We can't predict the future. And I mean, the end game in all of this when it comes to grain marketing is to make money on the farm, right? And if I don't think that at the end of the day, like if you miss some upside in the market, it's not a make or break deal for you. What's a make or break deal is ultimately just the profitability, the revenue, budgets, all that sort of stuff.
Absolutely. And that's the in-look stuff. That's look at your needs, your issues, what price works for you, and stay focused on that, because the outlook, why this is so difficult. I mean, I can pick up 5 articles this morning that tell you reasons why you're a fool. New crop sale.
Yeah. Yeah, I think that's probably a good place to wrap it up. Ed, I really want to thank you for being on, and we should do this again sometime.
Okay.
I think you've got some great information. Guys, if you have any questions for me or for Ed after the broadcast here, if you're watching the recording or you're listening on the podcast, send me an email to info@standardgrain.com and I can address it in one of the upcoming episodes. And I can even send Ed the questions too and do kind of a follow-up. So everybody, thanks for tuning in. Ed, thank you very much again.
Hey, thank you, Joe. Thanks for having me. Good luck to all your listeners.
Thank you. We'll see you guys next time.